Good morning, ladies and gentlemen. Welcome to our special show, Top Stocks, where we discuss events which have led to some of the finest shares in the market being available at a dirt cheap price, or an event which may have triggered a sell-off in a sector. But first, here are the disclaimers. This show is not an attempt for you or from our side to prompt you to buy or sell any of these counters. This is, of course, just an information and educational segment which tells you what is the latest that is happening on a particular stock or in a particular sector, which might create a long-term wealth creating position or might also prevent you from getting into a terrible position. First and foremost, if you wish to take part in this particular sector or stock, you need to consult an independent financial advisor, and as usual, I have no trading positions in the stocks that are being discussed. With this background in mind, ladies and gentlemen, we will be focusing today on a major development that has happened in the cable and wireless industry. This is a special segment of maybe 5 or 7 stocks which make cables and wires which go into the back end of your home, providing all the electricity via their connections. Now there are 4 or 5 stocks which have been impacted adversely by an announcement made by UltraTech's cement, which plans to enter this sector at a cost of 1800 crore rupees. This is the first investment that this cement giant has announced as of yesterday. Now look at the result of which is there in the market. Today's 4 top losers are from the cable and wire sector, which are now facing imminent competition from UltraTech's cement. KEI Industries is the top loser, down 18% at 3,103. Polycab has lost 14.4% at 4,933. You have Havells down 5.5% at 1462, and similarly stocks like Finolex Cables, Diamond Cables are all down between 4 and 5%. RR Kabel, which was the most recent entrant in terms of listings in the secondary markets, is down 13% at 965. Why are these stocks falling as much only at a time when the entry has been announced by UltraTech's cement? Well, there is a precedent to this whole setup. One, there is, as a lot of analysts from brokerages such as CLSA, CLSA, Jefferies and Citibank point out, that the entire sector is likely to be derated. Earnings are going to be at risk, margin expansion is going to be at a risk at a time when many of these stocks such as Polycab, such as Havells, such as KEI Industries are trading at very lofty valuations despite the sell-off in the market. Please take a look at how valuations stack up. I am just going to show you how Polycab is in terms of price to earnings at 47 compared with the Nifty PE of about 2021. Price to book on Polycab is 9.5. Similarly, KEI Industries, which is down 18% today, has a price to earnings multiple of 56.8 and a price to book of 6.5. RR Kabel has a price earnings of 48 and a price to book of 6. By any stretch of imagination, these stocks are still overvalued despite the fall that we are seeing from September 2024. Now added to this is the imminent entry of UltraTech's cement. Why is the market worried? Because about 2 years ago, UltraTech's peer in the Aditya Birla group, this is a very cash rich group, had announced an entry into the paints business. Seeing the margins that Asian Paints, Berger Paints, Kansai Nerolac and Akzo Nobel enjoyed, Grasim decided to enter the paints business, and nothing is better than the example of Asian Paints. The markets have completely derated a top performing stock like Asian Paints. Till about September 2024, or maybe when Birla announced its entry into the paints business, the stock was trading at 3,500 rupees. This was in July of 2023. from 3,500 rupees. The stock has now corrected to 2,200 rupees, falling 38%. In the last 2 years, when the Birla Group has made announcements of about 10,000 crore rupees in setting up paints companies, in setting up factories, in creating a distribution channel, Asian Paints, which has been one of the best known multi-baggers over the last 20-25 years in the market, has corrected to the extent of 38%. All those lofty valuations that were there in July of 2023 have come down. A similar kind of action was seen on Berger Paints, on Kansai Nerolac as well. Now the story is repeating itself. UltraTech, which is India's largest cement player, wants to use its existing distribution network to get into the cables and wire business. Now it has announced just an 1,800 crore rupee expansion plan into this business. As a result, about 20,000 crore rupees of market capitalization has been wiped away from Polycab, from KEI Industries, Havells, Diamond Cables, Finolex Cables, in the entire cable sector. So this is, ladies and gentlemen, not a time to bottom fish. Please do not look at these prices. Remember, Polycab and Havells are also available in the F&O sector. So those who don't even have the stock can and will be selling futures. Again, I said this is not an invitation for you to either buy Polycab at current levels or sell them at current levels if they are in your portfolio. For that, an independent financial advisor would be better placed. My only job is to forewarn you that an impending price war, margin compression, EBITDA compression is about to happen in the cable and wireless business, cable and wires business, and one must be very, very careful with what one plans to do in this particular sector. Do not try to catch a falling life. If you see Polycab down 14%, KEI Industries down 18%, this is the first day. Remember, just as UltraTech announces its expansion, sets up factories, and of course sets up a distribution channel, the entire sector will most probably react negatively to the presence of a deep-seated cash-rich group entering into this very nice, closed, almost duopolistic sector in which 2 or 3 major players have enjoyed a lot of margin expansion over the last many years. If you look at the net margin of Polycab, it's 8.9%. Finolex Cables has a net margin of 8.6%. KEI Industries has a net margin of 6.9%. And over many years, look at Polycab. Each year, the stock in the last 5 years has appreciated about 40%. It has handsomely outperformed the Sensex and the Bombay Stock Exchange Consumer Capital Goods Index. Now, this is the margin that most likely is going to compress. If you look at KEI Industries' performance over the longer term, I request the PCR to fire a longer term chart of KEI Industries. You will see this stock has been also one of the multi-baggers that has graced the Indian markets over the last 10 years. In the last 10 years, each year, the stock has gone up by 49%. So you can well imagine how lofty their valuations are. I had just said that the PE of KEI Industries is 56. The 5-year median PE of KEI Industries is 31. Just look at the gap and just look at how the market has performed. KEI has performed in the market over the last 10 years or so. So this is the kind of moves that are likely to be painful in the coming few quarters. I'd also like to mark the operating margin, the EBIT margin of KEI, that's 9.41 over the last 3 years, and for the last 5 years it is 9.35. This is the moat or the safety that attracts deep-pocketed, cash-rich groups like Aditya Birla into this kind of a market. They have disrupted the paints sector, they have disrupted the jewellery sector with the entry of Indriya versus Titan and Reliance Jewels, and now they are bent upon disrupting the cables and wire business, where a lot of existing players have made supernormal money and of course have huge margins. So that is under stress. Please do not try to bottom fish on Polycab, on KEI Industries, and of course on stocks such as Havells, Phenolics Cables. There is a possibility that prices in this sector could correct fairly sharply with this impending launch of UltraTech in the sector, and of course the fact that overall markets have been punishing overvaluations for a fairly long time. So stay glued. When the time comes, we'll again talk to analysts and discuss whether valuations have come in the buy zone for Polycab or Havells or KEI, but for the moment it is not something that you should step in. Again, this is all research based, done by analysts. This is not an invitation to buy or sell. Please consult an independent financial advisor if you wish to get into or exit Polycab, KEI Industries, Havells and many other cable players at this point of time. Thank you for watching.
Hello and welcome to Business Today's Banking and Economic Summit. We are here at the Best Banks Award and I'm joined by Manoj Kumar Vijay, who's the Office Managing Partner, Mumbai, and Head of the Risk Advisory KPMG in India.